The CEO of U.S. Operations, Bill Simon, says he expects big price increases in the coming months for clothing, food, and other products for all U.S. consumers. He told USA Today that Walmart is already seeing cost increases starting to come through at what he says is a, quote, pretty rapid rate. This goes to the economy, and this is a big concern when Walmart says something like this, Liz.
Yeah, no kidding. And it's basically because of price inflation overseas. And I got to tell you something, Cheryl. You see inflation surpassing 5% in China, in Brazil, and India. You got to expect by 2050, we're going to add the equivalent about 2 billion more people to the planet. That means the equivalent of 2 whole Indias, the countries of Indias. And so what you're seeing now is, and this matters for our markets, those central banks over there are starting to tighten. They're starting to raise interest rates. That means they're trying to ward off inflation. That means the interest rate hike has a lag effect. When they start to tighten and their markets start to feel the impact of that tightening, that slows down their growth, and that could have an impact on our stock market here.
Tyler, how do we profit from this, though, on the other side?
Well, I think what Biltmore is doing at this point is we're putting into place managed futures managers, and the average investor can buy these through mutual funds. And what these managers are doing are looking for trends in things like commodity prices and interest rates and these sort of things. And in the past, this was never, you had to be worth $1 million, $5 million to enter into these funds. So, at this point, with markets getting a lot more sophisticated, there are instruments that investors can capitalize on when these prices move the way that they have. So.
And the thing is, you got to mention, I mean, Sandra's bringing up a great point about ethanol. Ethanol, what, is about 8–10% of our entire fuel consumption in this country, and it consumes, what, 40% of our maize crop, and that's a really important issue for policymakers in D.C.
Mergers and acquisitions have been soaring to their highest level in 3 years during the first quarter of this year, led by these 5 deals. Take a look at this. Maybe not sexy, but a way to make money. Commercial real estate firms, A&B Properties, and Prologis merging. That was a $15 billion deal. Automaker Fiat with an $18.5 billion share conversion. Duke and Progress Energy combining to become the largest U.S. utility. That's a $26 billion deal. Number 2, AT&T's controversial offer to buy Deutsche Telekom's T-Mobile unit. That's a $39 billion deal. And at the top of the M&A game, AIG with its $59 billion stock conversion. So will this year be the year of the deal for Wall Street? Chris Williams, Harrison Williams co-founder, joins me now. And that is the question. It seems like we have a lot of deals happening. What does the rest of the year look like?
Cheryl, we're predicting a very strong rest of the year. So far, we see our first quarter revenue up over 20% year over year, and we would expect the rest of the year to be equally as strong. It's really quite good out there.
Chris, when you get behind the doors of these, with these deals with these corporations, we obviously know that there's almost $2 trillion in these corporate coffers. One of the reasons to drive M&A further. What is the talk about further share buybacks and dividends increases rather than M&A? Is there a feeling of one over the other?
Well, I think so many companies are really looking at both. I mean, they've got to find a way to use that cash. So certainly share repurchases are on the table in many corporate boardrooms. But again, when you look at deals, I mean, so many companies are trading for fairly strong multiples, and they really don't have quite the organic growth to support that. So they're really in this position where they've got to continue to kind of feed the beast through additional acquisitions.
I got to tell you something.
Seeing.
A lot of these companies feel like they have these Fort Knox balance sheets right now with all this cash. And one guy I was saying to, look at it this way. Shareholder meetings are coming up. They got to get a big boffo headline out there. So they're doing stock buybacks. They're doing M&A deals. They're deploying that cash to raise dividends, to giving more dividends to investors. But I got to tell you something. How do you play this? Because you do not want to invest in the merged company, such like a Sprint Nextel or AOL Time Warner, because a merged company trying to fix those problems is like trying to fix a car going 60 miles per hour, and it's really rough. So how do you find the target companies to invest in?
Well, look, I think that's always a little bit of a crapshoot, quite frankly. But what you've got to remember is that so much of the M&A deal volume really is the deals below $1 billion, below $1.5 billion, that don't necessarily grab the headlines. But that's where 80% of the action is, frankly, in our business. And I can tell you that that market really is incredibly strong right now.
$717 billion globally in deals. I mean, are we going to continue to set new records?
I think 2011 is definitely going to be a tremendous year. last year we saw revenue up, over 100%. We're not expecting quite that kind of jump this year, but it's going to continue to be very strong. And it's led by healthcare, technology, industrials, energy and power. Almost every one of our sectors is incredibly strong.
And now
right
maybe,
now.
Chris, I got to run, but maybe now, though, also solar and wind on the heels of the nuclear disaster in Japan, right?
Absolutely. We're getting definitely some inbound calls on that, and so we would expect that to be strong for the next couple of years.
Chris Williams, Harris Williams, Managing Director. Chris, thank you very much for being on Fox.